Bang. Hey, folks, glad you could join us. This is 3 at 3 p.m. Eastern Time. What do? We bring you unusual activity. This is call buying or put buying. Calls, of course, bullish. I have an example. Puts, of course, bearish. I have an example. And both were very recent trades and both worked out magnificently today. So with that said, let's get started with unusual activity. This is a phrase that we have coined, and my brother Pete and I are very proud to be the pioneers in unusual option activity. So let's take a look at what we've got. Starbucks, yeah, just from a couple days ago, we had this one, Starbucks. The stock was 105.41. As you see up there in that band near the top of the page, 9,400 of the 107 calls traded. Well, today, Starbucks just a little bit ago was 107.08. So obviously working pretty well, and we've still got a day to go, but we've taken off half the position. Now, you might ask yourself, why, John? Why would you guys take off half? Because when we have options that work, we want to take profits, especially in the short term. Meaning that these were options that were established just on the 14th. And now here we are on the 16th. We've only got one more day until expiration, folks. And so you've got to be very quick to cut losses, if that's what we have, or to take profits, which is what we have. So for that reason, we are taking profits on 50% and letting the rest run. If the stock starts pulling back, we will exit the whole trade and take as much of that profit and keep as much of it as possible, rather than letting it pull back to our entry, for instance. Now, I told you I'd describe a winner on the call side and a winner on the put side. How about this? Stock's $12.68. And what did they do? Well, they came scrambling in yesterday, one day ago. They came scrambling in and bought the November 14 call options. This gives them the right to take stock at 14. Now, you could buy a different strike, and that's what I did, of course, not because I'm smart, but because I'm greedy and I don't want to lose. So what I do, folks, is I buy at the monies and I sell above the market as we move in that direction. In this case, I have now taken off 75% of this trade. Why? Because the stock popped, as you see there in the pre-market today, all the way up over $14. So the 1250 calls or whichever that I had purchased are now fairly deep in the money. It's a big winner. So we want to pull that money off the table. And if you wanted to, you could roll up and out. But these were specifically November options. We believe specifically placed for the earnings that came out today. And as you know, they exceeded street expectations. Stock trades up big, over 12%. Great. Now it has pulled back, and it is up only, I think, 4 or 5% last I checked. So taking profits quickly, as I said, or cutting losses quickly is vitally important when you're in these short-term options. So that's an example on the call side. Let's take a look at a put example. Puts on November 7th, there you see it, 11.7 Walmart. They were buying puts in Walmart. Well, stocks outperformed like crazy this year. It was up going into the earnings by 20% year to date. The retail ETF, XRT, was only up 3% year to date. I call that outperformance. 7 times better for Walmart? Yeah, so maybe it's due for a little pullback, but that wasn't what we were going on. We were going on the fact that they were buying puts, the 162.50 puts with the stock at 166. Well, guess what? Yesterday on the close, the stock was 169.78, call it almost 170. And today in the pre-market, down 10%, down $10. It's down a little over $12.50 now. And trading through 160. So those 162.50 puts did very well. And anything at the 165 strike on down, which is where we play, again, at the money, 165. From there on down, made a bigger score. So what I'm trying to drive home here is not only that we have a fair amount of winners every day, because we do have losers. We cut those losses at a 50% drawdown. I'm talking about options now. So in this case, if I paid $1.58 for an option, like it says the 162.50 puts were back on November 7th, I would cut that loss if it traded to around 80 cents, because that would mean a 50% drawdown. So I'm not looking at the stock saying, oh, I'll let Walmart fall to half of its price from 170. No, I'm talking about the options, folks. So if I'm trading the options and I'm buying one strike in the case of puts and selling a put strike underneath it, I'm trying to set myself up in a directional trade to the downside, and I'm addressing some of the time decay and capital outlay that I have to have every single time that I buy an option. So that's the way we trade. This is the way we trade the put side. I already showed you the way we traded the call side, and both of these were November expiry options, meaning they expire tomorrow. So it's not waiting around, folks. This is hit it fast if it's a winner, cut it fast if it's a loser. That's the way you win. If you'd like to get great trades like this every day from me and Pete, go to marketrebellion.com/bang. That's marketrebellion.com/bang. If you're not already getting them, you should be. Make sure you go subscribe or call one of our experts today. All right, let's get started with the rest of 3 at 3, which is 3 fresh trades right now. GoGo. This is, of course, internet when you fly for the most part. GoGo provides that. Today we saw December 10 puts with the stock at $10.29. So that means 3 weeks from now, 4 weeks from now, actually, 4 weeks from now, somebody's betting that GoGo moves to the downside. So if you bought puts, these are still going to be very fast decay, not as fast as a weekly option, but still pretty fast on the time decay slide. So you've got to be ready to sell options against the options you bought. Since this is a put option and we own it here, I'm going to be selling put options lower. So if I bought the 10 puts, I'm going to sell something like the 8 puts or something against it, so I can mitigate how much cash I put into the trade, as well as how much I can still be in a directional trade without the same risks as just being naked long the 10 puts. Second trade, CCJ. This is Camco. We've had it hit several times. You guys know that because you've heard it from us. You've heard it in the 30s, low 30s. You've heard it in the mid 30s. Now stock's almost to the mid 40s, and they're buying the 29th of December. That's the expiration, folks. So it's not regular DECE expiration. It's 2 weeks after regular DECE expiration. They're buying the 50 calls. Could it get there? Of course it could. Also, could we profit from it going up and not getting there? Of course. Might see a fast break to the upside. These calls move up quickly. We take our profits quickly. So unless they roll this out to January or something, we'll be out of this on that expiration at the latest, and most probably before then. But this is an upside bet on CCJ Camco. Whoops, let me see. There we go. The third one is Capital One Financial, COF. That's 104.37 was where the stock was. They bought 3,200 of the Feb 100 puts. So it's another downside bet right now. So, but these are February. I don't need to sell anything against them right away. Why? Because the time decay is really steep at about the 6-week mark, meaning 6 weeks out into the future. So around those December 29 expiry times, that's when I'd be selling something from next week, the week after, week after, week after. That's when I'd be selling options against the options that I buy. Something all the way out in January, or in this case, all the way out in February, I'm not selling something against it right away. I'm going to give it a little time, sort of like when I have a fish on the hook and I let him run a little bit before I set the hook. That's just what I'm doing with a longer dated position like this. So Capital One, stocks at 104. They're buying the Feb 100 puts. So that's $4 under where the stock is trading right now. And whoops, sorry. Got to go back one. There we go. I appreciate all of you joining us and all the great retweets as well as comments about what we do. We're very proud of what we do, and we do this every business day, folks. So make sure you check out our work at marketrebellion.com/get started. You can get started with any of our strategies, which would be a subscription basis, or you can learn basic options, intermediate options, advanced options. We have all three, depending what level you're at. We can help you get better at trading and managing risk. Check it out at marketrebellion.com/get started. Well, that's going to do it for us today, folks. I thank you for joining me as always, and I hope that you have paid attention to the disclaimer that we run at the end of the show here, because there are always risks with any investment that you make, and you need to understand that we also have intellectual property for what I have shown you here today. So be aware of both. Have a great day, and I'll see you tomorrow.